Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to the show, John.
Good to be back, Jim.
John, last week a junior called Klondike Silver put out a 2-sentence exploration press release that was so short it caught your attention. Was it good or bad news?
Jim, Klondike Silver is one of those companies that I have generally avoided because it's in a part of British Columbia, southern British Columbia, an old silver mining district. They have this 100-ton per day mill, and their goal has been to consolidate most of this district and track down these old veins and dig up small batches of high-grade silver, lead, zinc mineralization and feed that mill. You know, typical sort of mom and pop type of operation. So I have historically ignored. But a friend last week said, check out this news release. This is actually important. So I did, and I'll read to you what it says. It says, further to its January 18th news release, Klondike Silver has provided the following update on exploration drilling at its zinc-lead silver project in southeastern British Columbia. Drill hole number 1 intersected the main lode structure from 43 meters to the end of the hole at 62 meters for 18 meters of intersection. Klondike Silver has commenced drilling hole number 2. End of press release. Basically, 2 sentences. And there is a rule of thumb in the industry that the length of an exploration result news release is inversely proportional to its importance. So if you apply this rule of thumb here, say, okay, this must be really important. Either it's very bad news or very good news. But there is no way that you can tell from reading this news release what on earth it means. It is a news release intended for an audience of shareholders who have loaded an elaborate concept, an exploration play into their heads and have been waiting for exactly this type of news release. Now, the stock didn't really do anything. It sort of sits at 4 to 5 cents with this 24 million unit private placement at a nickel that they have underway. It has 308 million shares fully diluted. With this financing, there would be about 124 million warrants exercisable at 5 to 7 cents over the next 2 to 5 years. So obviously there was no reaction in the market, but I was sufficiently intrigued to try and find out why such a short news release. And so I did some homework and talked to David Makepeace, who is the key person now driving the exploration strategy, and got to understand that this is indeed a significant press release. And to make it clear why, I have to give a bit of a background. The Slocan mining district was discovered in 1892. There's a series of sort of east-west trending, fairly narrow, very high-grade veins. It operated until 1993, mainly through small-scale operations. It was like an old-style camp where you had all these crown grants and all these strange configurations. Everybody would have some 1,500-foot by 1,500-foot claim, and they would find some silver veins sticking out of the ground, and then they would chase it, and then they would be the next party's job to continue mining it. They had 173 individual little mines in this area. Now, the biggest vein structure, it was called the main lode structure, and it runs about 9 kilometers from close to Silverton in the west, where the standard mine was a super high grade vein of 90,000 tons or so, all the way to the east. And in the middle of it was the Salvana vein, which was the only one that doesn't outcrop somewhere. It was completely blind. It was discovered, and that was the last vein to be mined. Now, in these vein structures, it is not a continuous mineralized vein. What they have is lodes in these veins. And the origin of this system, according to the prevailing theory, is that about 160 million years ago, a intrusion came in, a batholith came in there, and it propagated faults through this mess of limestones and other metasedimentary rocks. And then the heat engine generated the fluid flow, which dropped out all this mineralization. But it only did this in these horizons where the veins happen to cross through a quartzite, which is usually not a good host, but in this case had been shattered and ended up being the perfect place for these lodes. So you have these irregular lodes of high-grade mineralization associated with these sheet-like fault control vein systems. And the main lode structure was the key one from which most of the ore was mined, and it was generally direct shipped to the trail smelter of Cominco. Now, when that batholith cooled, it contracted, and it caused lots of local displacement in these vein fault control vein sheets. So it was never a simple case of just drifting along the vein and waiting until you get to the lodes and mining them. You had to also figure out what the local displacements of the vein were, which made it a very complicated camp. And one of the in the main lode structure, there is a 1.5 kilometer section called the Silver Mile, and it's not really a silver mile because they don't really know where that main lode structure disappeared to, and it's been a mystery for ages. So there is this gap of that main lode structure which is missing. And the mine was last operated in that sort of until 1980, between 82 and 89 by Dickinson Mines, and Dave Makepeace was the chief geologist who worked it at the time, and Stephen Phillips was the mine manager, and they both had ideas of how to figure out where that missing Silver Mile ended up, because that 1.5 kilometers could hold at least as much, if not more, as the main Silvana vein, but the company preferred to head east, and then eventually sold it to Trominco, and Trominco worked it for another few years until 1993 with that 100-ton per day mill, and then the whole camp died. It was shut down. That was the end of the Slocan mining district. And then around 2000, Richard Hughes, through Klondike Gold, decided he wanted to consolidate this district and did all the heavy lifting of all these horrible little claims, stitching them all together, ended up putting together a continuous land package covering 63 of former mines, and then until about say 2015, or over the next so almost 10, 12, 14 years, spent millions and millions of dollars surface exploration, figuring out where all those veins were, because the idea was that because of that fragmented mining history, there would still be these unmined lodes where the owners just never got around to mining it because they kept holding out for a bigger buyout from somebody who was actually going to mine it. And then the camp died, and it all became worthless. And the goal was to find these and feed that 100-ton per day mill. And about 2010, Richard tried to get David Makepeace to come and join him, but Richard wasn't interested in finding the Silver Mile. He just wanted David to help with sorting out the ore and stuff. And he said, no, I'm not interested in that. But in 2015, Richard Hughes capitulated and brought Dave Makepeace on board to figure out where the Silver Mile ended up. And so for the last few years, their efforts have been divided between keeping the environmental regulators happy about the reclamation and keeping the tailings pond working properly. The mill was shut down in 2013, is on care and maintenance. And, of course, then figuring out where the Silver Mile ended up. And what Makepeace did not have available back in the 80s was the sort of digital computing power that's available today. So much of what he did during the last few years was to digitize all this historical data that had piled up and create a 3D model with which he and Stephen Phillips sort of thought it through and figured out where did that Silver Mile end up. And last fall, they started a drift to extend the underground drift that had been the mining drift, to extend it west to create the first drill station to start poking in the direction to see if they can find the silver mile. And in fact, this news release that we got said we have hit the main lode structure. Now, they did not hit high-grade mineralization. They simply hit the structure. So from this station, they can fan out, probably a dozen other holes, and they will do that and hope that, if we get lucky and hit the main lode or the high-grade silver, zinc, lead lode, then it's game on. Then we have 1.5 kilometers of the displaced main lode structure. Now, the stock hasn't really reacted because until they report we have this 1,000 gram per ton plus silver with 10-20% lead and 10-20% zinc, the market is not going to believe. But if those two people, Stephen Phillips and Dave Makepeace, do not know how to recognize that this is the main lode structure, then nobody would be able to do so. So this little 2-line news release is very important. The company is still struggling to complete this $1.2 million financing. According to Dave Makepeace, it will take another $700,000 to extend the drift farther west and set up another drill station so that they can start mapping out where are the lode structures. But the next milestone will be intersecting high-grade mineralization, and then Richard Hughes' dream of reviving this the Slocan mining district will be back on track, because all that work that was done with those other parallel veins, it really wasn't worth anything unless you had a sustained feed for that the old Sandon mill. And the Silvana structure, if that delivers the zones, the ore needed to get that started, it could eventually be scaled up larger than 100 tons per day, and all those other structures vein structures that have been mapped out can all be properly explored and revive this old mining camp, which ironically has not seen any academic work by the various geological surveys since 1935. So the brevity of this news release actually is very significant for what appears to be a re-emerging discovery in the form of the missing silver mile now found.
We'll have more with John Kaiser right after this.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Welcome back. We're chatting with John Kaiser. John, Nevada Exploration put out a long news release summing up completion of drilling of its South Grass Valley project in Nevada. Was that an example of importance being inversely proportional to length?
Well, Jim, the market certainly treated it that way. The company has now completed 8 holes on the South Grass Valley project in Nevada. They've intersected a hydrothermal system with intensely altered and silicified, with Carlin-type pathfinders all over the place, within a corridor 3,000 meters by at least 500 meters, but they do not yet have an ore grade interval that signals to the market we have a discovery. We have a potential emerging discovery in that this is a lower plate hosted system that was basically blind under gravel cover, but we do not have a gold interval of any consequence or any length or grade that approaches ore grade. So, of course, the company explains everything in great detail. They are still encouraged, and rightfully so, but they do not yet have that big discovery. And it is a fact that when the company remains encouraged by a project and still feels that there is a prize with size to be found, you will see long-winded explanations about what this means and that means and what we have to do next. And that is the situation right now. There's one hole still pending. It was hole number 8. They drilled it with more expensive oriented core. It was in the middle fence of that corridor, about 400 meters west of hole number 3. And they were expecting to hit fresher rock to be sort of outside the part that had been pumped by the fluids. But even there they got unlucky, and it's still silicified in that area. And the reason they wanted the fresher rock was so that they could properly identify all the lithologies, because in the hydrothermal system they are all completely messed up and barely recognizable. They wanted to see the bedding planes, so that they can start putting it all together and start to understand what's going on within this system. But they hit the bedrock at 94 meters, and it was all looks just like hole number 3. And at 248 meters, they had to stop the hole because they hit a fault within which there was a big cavity, and when a drill enters a big cavity, you're probably going to get it stuck. So they pulled it out and killed that hole. The interval, 150 meters or so, has been shipped for assay, but this time around, the market will have no expectations. What bummed the market out about the latest results was that in the bottom of hole 6, there were a couple hundred meters of black carbonaceous, silicified, brecciated pyritic rock of the sort that you might expect to run at least something better than 10, 20 ppb gold. Well, that hole and the one just to the east, hole number 7, did not give them any better gold grades than the earlier holes. So they still have this big, giant system with 8 vectoring holes, starting to understand the geology. Hole number 7 did have a higher level of pathfinders, the antimony, the arsenic, and mercury, and so on. So they think in that direction it is getting closer to the source of the fluid flow. In a system like that, the big question is, where did the gold drop out? The market skepticism is, was there ever any gold in this system to drop out anywhere? Was it just a bunch of toxic elements flowing through this area, dropping out all over the place? They do have a soil sample grid extending to the north where they see mercury values increasing, which could be a signal that this is where everything is dropped out, where you might find a deposit. They were a bit in a panic in January during the shutdown because they needed to permit extra holes in that area. But since the shutdown ended and then a second shutdown was averted, they apparently have those drill permits in place. So the next step for them is to raise several $1 million, ideally bring in a strategic partner who will make sure that this thing gets done properly. They have been relying on private placements from sort of high net worth retail type investors, but that type of audience tends to be fairly impatient. So company is still in the game. It's still got its vectoring strategy, but they're going to be heading to PDAC, and hopefully they can bring on board a strategic investor that gives them the several $1 million needed to properly complete the setup for a future spearfishing program where they hope to be in a position to score the big ore body that they think is present in this system.
We'll have more with John Kaiser right after this.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWBF and on Frankfurt symbol 1ZB. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're speaking with John Kaiser. John, Azimut Exploration put out a lengthy news release without results that the market liked. What was that about?
Well, last year, Azimut Exploration was one of my favorite bottom fish. They were in Quebec. They were generating prospects. They had formed a strategic alliance with SOQUEM. It was initially a 50-50 deal. And Azimut did all the work. SOQUEM put up the money, and they generated, a number of very important projects. And last October, when I was at the Explore conference, the big buzz was the Mithril project of Midland Exploration. And a couple of weeks ago on Discovery Watch, we talked about that project. And Gino Roger and his team at Midland had followed up a 2011 showing that was sort of 2% copper equivalent, copper, gold, moly, and silver. And when they checked the area around it, they discovered all these boulders and even additional outcrop that was mineralized. It wasn't so easy to see because there is no pyrite in this system. It's basically chalcopyrite. So you do not get the rusting, the gossiness look that alerts geologists. You have to actually look really closely to recognize that this is a sulfide system here. And what Azimut had done is they'd also taken all this data that the government had generated over the years, as well as assessment work filed by both juniors and majors in this region, this James Bay region, and done their predictive modeling, and had managed to stake the whole area to the west of what became the Mithril project based on a large stream lake bottom sediment anomaly featuring bismuth. And it now they call it the Piqua project, and it now turns out that whatever it is that Midland is chasing at Mithril, it probably also exists on the Piqua project, and in fact they had put boots on the ground and generated the Hyperion showing, which also has some interesting values to the west of the Mithril. So this was a emerging new discovery, a new style of deposit for this region. Apparently Midland is very close to publishing the results of its IP survey on the Mithril target. Hopefully they get this out before PDAC so that everybody can see if there's chargeability anomaly associated with the trend that they've outlined with the MAG survey and also the boulder and outcrop chasing. But when I sat down with Jean-Marc Loulan in Montreal, I got quite excited by what he was showing me because I'd already understood what the Mithril story was about. And I said, wow, you're going to have 50% of that. And he said, well, actually not. Because in the fine print, you had to read the whole thing. SOQUEM had the option to go all the way to 100%, leave Azimut with a 2% royalty, which they could then buy down to, and leave them with a 1.2% royalty. And I said, this is terrible. You've become this royalty company. You're basically a service company doing all this work, and this government entity is supposed to use taxpayer money to do, high-risk exploration on all these prospects that you're generating in the James Bay region. And so I'd kind of, had diminished enthusiasm for Azimut, but the news release that came out yesterday was actually a blockbuster of groups rethinking their purpose. Now, SOQUEM's job is really to stimulate exploration and mining in Quebec. And for it to suddenly become a full-fledged competitor with the juniors and even the majors, that did not make a lot of sense. So they rethought this deal and said, okay, we are close to vesting for 100%, and after spending just over $3 million, why don't we do a deal where on these 4 projects, including Piqua, Azimut can earn back 50% by spending $3.3 million over the next 3 years. These other 2 projects we'll treat as a 50-50 JV where we both have to cough up half of the exploration budget. We'll let you be the operator because that's what you are good at. And then on these other few projects, we relinquish our right to go and also grab 100% for next to nothing. So in essence, SOQUEM backed down from having the overwhelming advantage and basically being responsible for finding something on all these prospects that Jean-Marc Louan's team at Azimut had generated to saying, okay, we're going to make sure that the shareholders of the junior get to benefit, and yes, they will have to put up more money. But even more stunning was the other deal that SOQUEM agreed to, which was on these Nunavik projects, which is the very far northwestern corner of Quebec, the most remote part of Quebec. And Azimut had in the past decade done a lot of grassroots work. They'd done all the sort of government, done the predictive modeling on the government data. They put boots on the ground. They had developed the case that this is territory for IOCG style system, iron oxide, copper, gold systems, which can be very large and very rich. And it's basically an unexplored region, and these things don't just stick out of the ground so that you fly over them and say, gee, I wonder what this big gossan is. Let's set down and, oh my gosh, we have a outcropping major new discovery. No, it's not like that in that area. But Azimut had 3 projects, the Rex South, the Rex Duquet, and the Nantain, which it had generated. And in this deal, SOQUEM has agreed to earn 50% by spending $16 million on these 3 projects, of which $8 million is firm for the first 2 years. In other words, they have to do this. And then once they vested for 50%, they can earn a 10% in any of those projects, any of those 3 projects, by spending an additional $8 million on one of those projects and delivering a PEA, which is huge for a little junior like Azimut. It vindicates all the work that they had done in the prior decade. They did have partners, but everybody gave up when the bear market started in 2011. So SOQUEM has gone back to its sort of purpose. It's putting up taxpayer money in a region where, a junior will end up with 40% of anything good that they find. But the putting that risk capital in there also opens up the potential for future dividends that, yes, there is something up there. We will develop this area in the northwestern corner of Quebec. It's outside the Plan Nord area, which is really the northern half of the southern half of Quebec, which is the James Bay region. But this was a tremendous announcement that shows that work will be done on these remote projects that Azimut generated. It gives Azimut back 50% of the project to the west of the Mithril, where there's a good chance this will become a very hot play this summer if Mithril does lead a discovery. And it does change the company's role from its traditional prospect generator, farm out role, because now they will have to raise money. But Quebec Inc., which is all those Quebec pension plans and government entities, they're all shareholders of Azimut. So I don't think the company will have any problem raising the money. They only have about 57 million shares fully diluted. So Azimut is back in the Quebec exploration game with the Piqua project as the western counterpart to Midland's Mithril project, and got our fingers crossed that this will turn out to be a major new discovery in the James Bay region of Quebec.
John, thanks a lot for the update.
You're welcome, Jim.
We've been speaking with John Kaiser. His website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Discovery Watch is a production of How Street Media Incorporated.